Corruption is the abuse of power or position for personal gain. There are many forms of corruption, including bribery, embezzlement, and extortion. For example, a purchasing agent for a company might take a bribe from a supplier. In return, the purchasing agent will pay more than the usual price for the goods. The supplier and the agent pocket the extra money at the expense of the company. Or, for instance, in the case of political corruption, government officials might use their positions to extort payments from a company that the government regulates.
Frauds are unlawful practices to scam consumers into paying a lot of money for misrepresented goods or services. At Investigation Council, we are familiar with investigating and litigating many different forms. Consumer fraud evolves with the development of new technology and has endless variations: false advertising, phone or email scams, identity theft, and credit card fraud. In this last case, fraudsters scam the victim by using their credit card information to obtain unauthorized funds from their account.
What is identity theft? The short answer is that identity theft is a crime. Identity theft is a term used to refer to all types of crime in which someone wrongfully obtains and uses another person's personal data in some way that involves fraud or deception, typically for economic gain. Unlike your fingerprints, which are unique to you and cannot be given to someone else for their use, your personal data, especially your social security number, your bank account or credit card number, your telephone calling card number, and other valuable identifying data can be used to personally profit at your expense. In many cases, a victim's losses may include not only out-of-pocket financial losses, but additional financial costs associated with trying to restore his reputation in the community.
Investment fraud criminals use a wide array of sophisticated and highly effective tactics to get people to part with their money.
The common factor amongst bankruptcy, tax, and divorce cases are that assets are taken from one individual or organization and given to another entity. Fraud is committed when the perpetrator intentionally hides or undervalues their assets. Bankruptcy filings have continuously been on the rise, and higher filings with less resources can create the perfect opportunity for perpetrators to misuse the bankruptcy codes. The purpose of bankruptcy is to relieve debtors from foreclosure and to protect creditors from unfair collection efforts by other creditors. Is essentially a battle between two parties, and when claims do arise, attorneys usually hire investigators to locate hidden assets through use of surveillance, public record searches, and even subpoenas of private records. Criminal charges can be filed if fraudulent acts are determined to be. Let us keep in mind that all fraud is intentional, so the underpayment of taxes based on complex rules or miscalculations does not constitute fraud. However, not reporting taxable income or abusing deductions or exemptions is illegal and does constitute fraud. If the IRS suspects that an individual or organization is underpaying their taxes, their tax return will be audited. If the audit reveals that there was an underpayment of taxes, the auditor can either assess civil fines and penalties or refer the case to the Criminal Investigation Division.
Oh wow! This is a really good deal. I'm getting this. Transfer. Okay, done. It's been a week already. Where's my tablet? What? Are you sure? Did you check the seller's track record? Did you ask for his contact number? Did you verify that the goods have really been shipped? There have been many cases of online scams where the prices of advertised goods are too good to be true. The seller then asked for additional payments, but the goods never arrived. Let's be diligent and do our checks first to make sure that this is not a scam.